Good morning, everyone. It is Thursday, May 1st, the first day of May, and the market has yet to open. The market will open in about 30 minutes. And I thought I'd stream to catch up on some of these earnings that have come out and review the performance of these companies and see if any of them are really good investing ideas. I can also look at some big headlines that I think are going to move the market. The biggest thing that we've seen in the last 24 hours is really positive earnings from Microsoft and Meta. I think they're going to move the market. There's a lot of uh, data that shows that those companies are clicking on all 8 cylinders and they are making a lot of money. There is some economic data that came out today, and that is that the weekly jobless claims did go up. They went up to 241,000. It was expected that they were going to come in at 224,000. So it's a nice bump. Um, and that combined with the report that we saw earlier in the week that showed that GDP had contracted a little bit, that combination spells recession. Now, if we have a light recession from a stock investing perspective, that isn't too bad. If we have a severe recession, it could be bad for all things. So um, that's that's what's going on with the economy. Um, the tariffs are definitely causing a big issue for the economy. I think it's creating reluctance from businesses and I think to some level, some individuals from buying products or making decisions and working on projects. So that's what's going on from an economic perspective. The market should rally today. I think it's based on those positive earnings. And there's some new earnings this morning, not as big as Microsoft, but pretty, I think, interesting. Eli Lilly reported. I wanted to take a look at that earnings and so forth. But the future should open higher on the NASDAQ, on the S&P, and the Dow. So that looks good. Oil, geez, oil is so low right now, crude oil. And that should help with the cost at the pump, right? So I know that inflation is a big problem that the Federal Reserve wants to make sure it doesn't get out of control. And I think if oil goes down, energy prices go down, it helps. It makes it easier to maintain a level of prices that are acceptable. So that's been interesting. Let me take a look at interest rates and then see what they're doing. Interest rates tend to move on economic data as well as stock data. Now, when you see negative numbers like this on the interest rate, that means that bond prices are going up. That means that more investors are moving into bonds, which is interesting. The bond market opens before the stock market. This is already open. You can trade bonds right now. And what is interesting is that if the stock market goes up and bond prices go up, that's a little unusual. They're supposed to kind of act in opposite directions. So it'll be interesting to watch this. I have been building up a little more of I've been buying into bonds. I mean, I just kind of nibble at bonds just over and over again, especially when nobody's buying and I see really good prices. On a day like this, I would not buy bonds because the prices are higher. So on a day like this, I just watch my bond values rise and I'm good to go. So the interest rates are dropping and bond prices are increasing. All right. So it looks like we've got some people on the stream already. Shadow Guy, good morning. Good to see your comment. I hope so. And Android PC, good to see you. Good morning. Yesterday, what's been interesting is the last 7 days have been a good market. So you see stock prices over, this is a 1 week heat map. It doesn't catch all 7 days, but catches probably 5 out of 7 days. But Nvidia's up, Apple's up, Microsoft's up, and Microsoft is up big this morning. So this is really going to jump. Meta's up, Tesla's up a lot. Palantir's up 17.5, ServiceNow 17.5. Eli Lilly's up 8%. Big news out of them today. AbbVie is really rolling. Go AbbVie. So there's some real winners out there. And, I don't think we're out of the potential of still being in a bear market. If we look at where the market is traded this year, we're still, down from the highs, right? We're still down 13%. But boy, it's last couple of weeks have been fairly productive. We're up 14%. So is this a bear market rally? Maybe. But if anything, it's nice to see stock prices rise. It gives investors that are actively managed portfolios more flexibility. If you see a stock rise and you know what, you want to create some cash, which is the case that I wanted to do with a couple stocks, it makes it easier to sell a stock that just rallied on a day, and you can get more money when you sell it. So that's good. If you just have like a down market, down day after day, psychologically, it just gets demoralizing. But second, it's, how do you rotate from one stock to another? How do you create cash? It gets tougher. So this rise, that we've seen over the last couple of weeks, it's really afforded me flexibility to create some more cash. And I'm sitting on a good pile of cash right now. Most of my investments, or most of my capital, is deployed into stocks, into bonds. But I did want to build up some cash in case this market decides it's going to go down further. And frankly, we've had some substantial news over the last 2 months that drove the market down. If we have another cycle of really, really bad news, maybe this recession gets nastier, I'm sitting on some cash ready to go so I can take advantage of some lower prices. Anthony, good to see you. Thanks for joining this morning. All right, so that's where the market's at. Let me take a peek at, so we saw the heat map. Earnings. So we saw big earnings from Microsoft and Meta and a lot of companies. I mean, yesterday we had 231 earnings reports. On Tuesday, 168. Today, 265. So I wanted to look at Eli Lilly. We'll look at MasterCard. We'll look at Lind, just because I'm curious what they do. I don't even know who they are. CBS, we'll take a look at that. And let's see. What else looks interesting to take a peek at? Oh, Roblox. Okay. The gaming company. That's always neat. So we got a lot to choose from. Just a lot of stuff going on. So that's like the pre-market is interesting because Eli Lilly is big. MasterCard's big. But today, after the market closes, we have Apple and we have Amazon. Humongous. And yesterday afternoon, we had a watch party to review Microsoft and Meta. That was really interesting. And we also looked at Qualcomm and just had a good conversation for about an hour and a half. I'm probably going to do that this afternoon as well. So I'll send out the invite to all members, and I'll put it on the Discord as well. Hopefully we can get the same crowd and around the same time, right after the market closes. We'll monitor the Apple earnings as well as Amazon. It looks like Amgen's going to report, Stryker, MicroStrategy, which I wonder when they're going to change their name to Strategy, and then a couple of others. Airbnb reports after the market closes. I'm going to be looking at that report. So that was really, really interesting. And we were able to analyze those companies and see their earnings reports. So I'll schedule that again. That was really productive, and I thought it was fun. All right, so let's take a peek at these stocks and see what's going on. Eli Lilly is selling off. Now, what I heard, and I know I see some comments, and I'll get back to the comments in a bit. So Eli Lilly, earlier today, I think I heard this interview, and they're doing well. They're, they had good results, but I think they're beginning to pump the brakes on their guidance, and that's what's causing this sell-off. The stock's done well. The 1 year, 22%, the 5 year up 479. Their innovation in weight loss is really where the money's at. And they've come out with a pill that people can take. And what I heard directly from the CEO is that the pill will work for people that just need to lose a little bit of weight. If a person needs to lose a lot of weight, they still need to do the injectable. So it's going to be a kind of an addressable market, but not the whole addressable market. And that was interesting to hear. So that's what's going on here. Let's take a look at maybe stock analysis. Yeah, man, go stock analysis. They already loaded what was announced. I really like that about this website. These guys are really solid. I get nothing from these guys. It's just a good website. It's my favorite. So Eli Lilly grew 45%, and they're a big company. That growth is what has really excited investors, and they really have, executed on their business plan. They're growing really well, and it looks good. $49 billion of revenue in the trailing 12 months. Their cost is low, really good gross profit. Look at that gross profit. As I like to say, beautiful. Free cash flow. This line is unimpressive. So you're crushing your top number. You're just getting a lot of things done. But where's the cash? You have such a high gross margin number. Where's the cash? So I think the cash is where it's kind of a swing and a miss. You should be growing it. 21 looked great. 22 started to go down. 23 was terrible. 24 was, and I guess because they were building out production for the weight loss drug, I guess that would be the reason for it. But it's still, they should be able to do it. Look at these gross margins. I mean, come on. Show me some cash. So cash flow is really low. That's interesting. I can't even value the company anywhere near their valuation because the cash flow is so undetermined. You'd have to do a really kind of created, or I would say imagined, cash forecast. You have to imagine it. You have to take their P&L and kind of say, well, I think this is what's going to happen. And that's way too much imagination for me. So looking at earnings per share, that's probably going to be a better predictor for Eli Lilly. Analysts, some analysts think it's going to continue to go up. Some analysts think it's a little too expensive. And they are growing their revenue nicely. It's going to slow down a bit. It's going to really slow down as they get bigger. The law of big numbers, you just can't keep growing at the same percentage when your top line number keeps getting bigger. Earnings per share is going to expand really nicely. The PE is high, but their growth is high. Now, is the growth in that drug, is their addressable market going to sustain, high growth? Maybe. But if it doesn't, boy, this is really going to come down in price. Eli Lilly, I think all the good news is priced into it, and I think it's become an expensive stock. I'm not an investor, and I wouldn't be buying Eli Lilly. I think I commend them for everything they've done. You can see that the market scares off the stock really fast from 930 down to 720 very quickly. It's rallied, but then today it's giving up some of those gains. It's given up 4.67. So interesting. Um, I don't think I value Eli Lilly, but let me take a look. Nope. Yeah, I don't value Eli Lilly just because it's one of those companies that doesn't fit my preferred type of stock to invest in, or it doesn't fit my models very well. It is a very large cap. You're paying, geez, about 16 to 18 times revenue for the company. That's expensive. PE 73, expensive. So it's just a little too expensive for this investor. You know, I will pass. But interesting that the stock is selling off. All right, so I've got a couple comments that I want to catch up on. So Strategy, I don't think their books were cooked, by the way. I think Strategy's legit. They're just really high risk. They're betting their business on Bitcoin, and we'll see how that plays out. I mean, that's a CEO, and we're going to take a look at the stock, and then we're going to look at Super Micro. I like talking about Super Micro because I think there's a couple lessons there. So, um, so let's take a look at Strategy, MicroStrategy, and they're up 3.39. Did they announce before the market opened? I guess so, right? And let's see if I can get to their earnings. So before Bitcoin was a thing, MicroStrategy, which is now a Strategy, was a software company, is a software company, and they do analytic software. I've known of them for a long time. And they are going to ride Bitcoin price. Bitcoin price is up. So they own, on their balance sheet, they own a lot of Bitcoin. So they've kind of have transitioned from being a software company doing analytical software to now being, I guess, a financial company where they're kind of a private equity hedge fund of Bitcoin. So it really, they've tried to migrate to become a very I guess a modern company. Let me see if I can find their investor information. So I can't see their investor news. So let me try this. So this is the webinar. I'd like to see the, nope, I don't want to attend it. I just want to see the financials. So it'd be nice if they could just make it easy. And where's the financial results? I just want to see the financial results. I don't want to attend. So, all right, I guess I'm not going to see their financials, so I'll come back to it. So MicroStrategy, I'm not like a fan, nor am I kind of a critic of Strategy. I've listened to their CEO, and he does have, I would say, a credible enthusiastic, optimistic point of view on Bitcoin. And I think it's worth listening to. I think he makes a lot of good points. Now, he makes a lot of good points, but he imagines a world that could happen, right? But it's really hard to determine. Is Bitcoin gonna stay that big? Is it gonna get bigger? Is it gonna be humongous? There's just some variables there that I worry about. Now, the opportunity is still there. I own more than one Bitcoin. Okay, so it's there. I've been selling a little bit of my Bitcoin to create cash. Some Bitcoin hodlers will probably crucify me for doing that, but oh well. I'm an investor. I'm not here to make friends nor win any popularity contests. Although I like, the community that we have and I love, talking to everybody. I'm not going to try to be a jerk. But the the proposition, or I would say the concept that this CEO predicts is pretty fundamentally different than the way we operate. And he's expecting that the world is really going to adopt Bitcoin in a big way. And it certainly may. I'm hedging my bet, buying some Bitcoin, keeping it for a while. But I think it's worth listening to this guy because even when I listen to an investor that I don't invest like that investor, I'm totally different. I always learn something because they may have a way of looking at a company or looking at a particular concept that's important in investing that I hadn't thought of, and it teaches me a skill, a little skill in looking at a company. So the things that I like about Saylor is that, I think the reason for Bitcoin always starts with you have the dollar, and I would say the debt level of the US um, becoming more inflated. And I don't think a lot of people would argue that, yeah, you're right. That we did pump a lot of money into the economy. I didn't agree with that. I'm not going political at all. But when we're pumping a lot of stimulus dollars into an economy, it's just going to create problems. And I know that it feels good temporarily for people to, for citizens and consumers to have money in their pocket. I get that. But we're going to pay the price for many, many years. And that coming back to the Bitcoin economy and the Bitcoin community and the Bitcoin network, nobody issues out a bunch of new Bitcoin. It's all been pre-established. It's going to get harder to produce new Bitcoins in the future. And it really makes that currency more valuable over time because it's not being inflated. It's not being inflated by decisions that give short-term relief for long-term pain. And I'm more of I want long-term success. I want to wake up 10 years from now and I want my wealth to be 4x in 10 years. Well, I can't do that by just constantly taking the easy way out of each day. No, sometimes, you got to bite the bullet and do the tough stuff. I kind of wish that we would do that as a country in the US. No matter who's in office. Let's just kind of make the country stronger, make our currency stronger, make our stock market stronger, make it so that we're not going to have inflation. We're not going to have a currency that doesn't have much value. So Bitcoin starts with that argument, and it really goes there. So I like hearing that point of view. And so anyway, that's enough on strategy. All right, so we're going to move on to super micro, and then I'm going to look at OGN and Qualcomm. Good to see you, Mike. Good. Yeah, Sailor's so pro Bitcoin, and I mean, he bet big, man. He was a billionaire before he started investing in Bitcoin, and he's put his money where his mouth is. So interesting that it's working out for him so far. All right. So Super Micro. So you guys that have seen my channel for a while know that I've covered Super Micro for a long time. And I covered Super Micro when it was, going berserk and started to short it. And I made money on the short. This is a hardware company, and it's a hardware company that does assemble, manufacture, design, high performance computing. And with AI being the big story for the last couple of years, the um, stock of Supermicro really went up. But there's what I thought was overdone is I get when you have a company like Nvidia that has huge margins and is seeing this really fast growth in revenue, take off in value. That one kind of makes sense. What doesn't make sense is when you have a hardware company like Dell, Supermicro. Look at this gross margin, 12.44. And when you look at Nvidia, and we're going to look at their gross margins, 75% gross margins. So when Nvidia sells $1,000 of revenue, the gross margin on that is $750. And then they get to do something with that. If they can control their cost, a lot of that's going to drop down in cash. When Supermicro sells $1,000 of revenue, they get $125, only $125 of gross margin. It leaves very little room to operate your back office, pay your, general administrative office, design, your engineers, R&D. It's like, that's not very good margins at all. To make matters even worse is look at the margin rate. It's dropping because competition is going to eat away at that margin. Hardware has proven to be a place where companies are constantly battling with one another, and this competition drives down prices. And now we're going to see tariffs potentially on product that's going to be imported. So it's like just a constant stream of problems for Supermicro. And when we look at their free cash flow, there is no free cash flow. The last couple of years just been negative. And out of the last 3 full years, only 1 year has been positive. So it's really hard to establish a free cash flow stream. So very low margins, negative cash flow, and we have high growth rate. Now, yeah, I get the growth rate, but you're growing and you're selling a product that you're not making money on. In fact, let's see if they make any money. So they do have pre-tax income. They did have a net income. So they're recognizing a profit while burning cash. So I'm not sure why they're burning so much cash. Are they building up inventory? So let's take a look at inventory. So here it is. They're building up inventory. That's really dangerous, okay, for a hardware producer, because if people don't want their hardware anymore and then their margins dropped, okay, so I'm beginning to see kind of a problem here, which is you have a lot of inventory, you can't sell it. So you start reducing your prices and then you're able to sell some of it, but you still are carrying a bunch of inventory. That's why it's burning your cash. And your customer is not paying you. Accounts receivable is going up. So it's like, man, this is not good. Not good at all. It's not going to end well. These stocks that go parabolic usually end like this. This is normal. And this one here, and again, you can go to my channel, search, SMCI. You could see, go back a year, what I was saying a year ago. And I shorted the stock. I made money on it. This is a stock that I would stay away from because just all it is a distraction now. Can it go up again? It's going to have short term, you know, rises like, oh man, so and so decided to buy into Super Micro. So it goes up 10, 20%. But if you want to double your money, this isn't going to be the stock for me, man. It's just going to be a constant, bumping along the bottom. It's down 56% over 1 year. Wow. And I think it's going to bump along, $20 a share, kind of be irrelevant going forward. It's a $19 billion market cap stock. When it was at its height, it was, it was just insane. $100 stock for a company that produces hardware. So Super Micro, and I guess did they announce today? So Nvidia drops after Super Micro earnings whiff. Uh-oh. So Super Micro is affecting Nvidia. Interesting. But their stock's kind of hanging in there. Yesterday it dropped big. I guess that's when earnings were announced. And now it's beginning to drop even more. But this one here, I mean, there's when I look at a company, right, and let's go to this chart here. There's companies that operate with a high, moat, competitive advantages. They're unique. Like Eli Lilly, they have a patent on their weight loss drugs. That is a barrier to competitors. They cannot copy what Eli Lilly is doing. They would get sued. And that company, combined with revenue growth, profitability, and free cash, they land in this green square. This is kind of like my matrix of value of companies. And I'm talking about Super Micro. Now, you could put Nvidia in here. I would agree. And if I invested in a company in the green, I'm probably paying closer to fair price. I can't expect that, hey, I'm going to buy Microsoft at a 60% discount. Yeah, dream on. If you can get me a 50% discount, I would load up on Microsoft, but it's just not going to happen. So you have to buy closer to fair value. In this gray box here, you have a company that has a really strong competitive advantage, but they don't make a lot of money and they're not growing really fast. But still, they have a competitive advantage. Maybe they have a limited market. Their addressable market is limited, but they're the strongest, for that market. Okay, well, I'd be willing to invest, but you have to give me a compelling discount. The flip side is a company doesn't have a strong competitive advantage, but they make a lot of money. Okay, give me a compelling discount and I am a player. Then you have the red. They have no moat, no competitive advantage. They don't make a lot of money. They're not growing. And I would put Super Microcomputer here because hardware is a commodity, and every 5 years, hardware manufacturers they just get killed. If you look at where Hewlett Packard once was and where they are today, they've gotten killed. Dell gotten killed. And I know Dell's had some rallies around AI, but in the context of things, right, they haven't kept up with Microsoft. They haven't kept up with all the other big companies. And Super Micro doesn't have like a competitive advantage. It's not like they own the NVIDIA patent. No, NVIDIA does. They use the NVIDIA components and create high performance machines, but others can do that. Like Dell, Hewlett Packard Enterprise, other manufacturers that are coming out can do the same configuration. And even companies can just configure and design their own computers. So they don't even need Super Micro. So for a company like that, I am very careful not to dabble in that because they're destined to be irrelevant and have a path towards zero. Could there be a short-term, swing trade in there? Yeah. If you took a business and had such a drastic discount that I wanted to play in it for a short period of time, yeah, I would entertain that. But I would have the exit strategy predetermined when I bought the stock. I'd be very careful in this zone. I like to operate in gray, and green. Gray is where we get great, propositions, and sometimes we get a stock that is misunderstood, make lots of money in the gray, can make a lot of money in the green, but we get opportunities every once in a while. Like 2022, we could have bought a lot of companies in the green at a great discount and held them. But now it's harder. You can't get an awesome discount on Microsoft, as an example. So that's super micro. Looks like the chat's blowing up. So let me catch up on the stocks, and then I'll get back to the chat. So bear with me. So that's super micro. Now let's go into healthcare and go to OGN. OGN was a spinoff from Merck, if I recall. Yeah, I think this is the one. And I think OGN does healthcare for women. Wow, down 20%. Let me have some coffee. Let me make sure I'm awake. Down 20%. Jeez, what happened? There must have been a substantial miss on revenue. Something happened. Dividend has really popped up to 10.5%. It looks like the numbers are in. Let's take a look at the quarterly. Yeah, we have. So as you guys have heard me say, and it's really important to me, so I'll repeat it, is top line revenue tells me the general, you know, health, and I would say momentum of the company. If it's a positive number like Eli Lilly, more customers are coming to Eli Lilly, more doctors are recommending it. Just the market is really accepting that company and really running with it. Great. The flip side, when you see contractions in revenue, that means loss of momentum. That means customers are going away. That means doctors are not prescribing, or Organon, or there's something going on. The product isn't good enough. The product has problems. The service has problems. And that tells me that this business is in trouble. Top line revenue. Okay. As we operate, just keeping up with inflation is the entry fee to being a viable company. If you cannot keep up with inflation, that might mean that you're on your way to zero. That's a big statement, right? Now, this company isn't going to go bankrupt overnight. It's just going to be a long, drawn out process if that's going to be the conclusion. So that's a big problem. That's why the market's saying we're out. If you can't grow, we're out. A lot of spinoffs work, but this one is not working. So the revenue is contracting. They're losing money. Actually, they are making money, but the revenue the profit has contracted as well. Free cash flow. There is free cash flow in the stock. Okay. The margins are okay. Wow. This one is interesting. Now, this isn't a heavily covered stock. This is not very well known. 4 analysts cover the stock, 85% discount. Wow. Okay. Revenue is going to begin to grow next year and kind of grow single digit. Okay. PE is super low. Man, really low. Now, can they afford that dividend? Let's make that let's analyze that point. So they pay $1.12 in dividends, and looking at their cash flow, so there's her free cash flow. So they have a lot of cash flow per share, so they could pay the dividend. Just their stock price is getting smashed so bad that it creates that really high cash dividend rate. But it looks like they can afford it. Man, this one here, I would still argue it's in the gray, but boy, they are getting slammed. This might be interesting to an investor that believes the worst case scenario is I'm going to make 11% on the dividend because it can't go down any further. This is in the healthcare space, and they do focus on providing products for women. So they're really focused on women's health, and why are they getting smashed? So women's health, biosimilars, and they have certain brands. Are they going to be hit with tariffs? Is that potentially a problem? I don't know. So this one's getting smashed so bad that it's becoming interesting for me. So I'm going to look at it a little further on my own. But interesting that this is getting smashed that bad. Now let's take a look at the heat map for today and see what's going on. So big cap stocks are cool again. Microsoft's up 9%. Meta's up 5%. And Google and Tesla are going up modestly. NVIDIA's up on the news that, hey, Microsoft's spending a lot of money in that data center. And so is Meta. Meta doubled their CapEx. just spending gobs of money trying to become an AI company. Look at healthcare. Eli Lilly down 7%. AbbVie has been on a roll. Okay, AbbVie's doing well. Pfizer's down. Amgen's down. J&J is down. I mean, there's a lot of red right here. Interesting. Okay. Why is energy rallying? Oil prices are down. Interesting. So we have, the market, these big caps are leading the market. And we got healthcare in the red. Staples pulling back a little bit. Okay. And we look at the market as a whole. We have the NASDAQ is up 1.64, S&P 0.82, and the Dow's up 0.44. So if you own the big caps, you're having a good day. If you don't, it depends where you're invested. Healthcare is having a bad day, but it's having a decent year. It's still, I believe, positive for the year as a sector. Staples are not doing well today. Okay. Airbnb is up. They announce after the market closes. So interesting. Okay. So I covered Organon. Let's get back on Qualcomm. So, Qualcomm down 7%. And we looked at Qualcomm yesterday on the watch party, and I analyzed it. And okay, they grew their revenue, they expanded their profits, and their cash flows look great. Their guidance wasn't all that bad, but they just don't participate in the data center. That's, I think, one of the Achilles heels of the company. The smartphone business is predominantly where they make money. And I think that's what the market is saying. Well, if there's tariffs on iPhones and Android driven devices like Samsung devices and Huawei's and all that, then Qualcomm is going to have a problem on their hands. I would agree with that theory, but right now it's just a theory. When we look at their financials, these guys performed well. And this is taking into account the quarter that was just announced. They grew 17%. Well, that's pretty good growth on a big number. Okay, that looks good. And then when we look at their free cash flow, very good free cash flow. They've been a free cash flow producing company. Okay, great. Gross margins right there. no, erosion of margins. So the fundamentals are positive. The market has something on their minds, or the market as a whole is thinking, Qualcomm's a loser. So they're selling it off and creating a better dividend stock that I think is gonna do better over the long haul. So we're down to 137. Even so, the stock's still up 75% over the 5-year. Over the 1 year, it's down 17. I'm a buyer of Qualcomm stock. I think it's really misunderstood. And I was kind of holding on Qualcomm, but man, if you're going to drop the price that much after looking at their fundamentals and looking at their earnings, yeah, I'll take that 57% discount on cash. I'll take the 52% discount blended. Yeah, I'll take it. Thank you very much. So Qualcomm looks good to me. I updated all this yesterday. We did it on the watch party. I didn't create a video because I wanted to sleep on it, because I'm like, the market really had me second guessing everything. Like, wait a second, how could the fundamentals look good and then the stock is dropping? And it had dropped, I don't know, 4% last night, and now it's down 7%. It's like, geez, that's nuts. I'm buying. Market's nuts. Sometimes the market is a little nuts. So I'll buy some Qualcomm. So thanks, Mike, for asking. And I think you asked on Discord for Organon. So I think we covered that one. Boy, that one's, the market this year, it has really been really interesting. And I think there's opportunity. Whenever the market is like selling off a stock by 25%, that seems to be a viable company. Like, hey, they're going to be around. They're going to be worth something. That could be an opportunity. Or Qualcomm getting ditched like this, 7% down. Look, the stock's recovering. I guess you guys are all buying up Qualcomm and driving up the price. I better hurry up and go buy my shares. But all kidding aside, a market like this provides opportunity, but we got to do our homework. We got to make good decisions and buy in at the right times, because bear markets are opportunity. It's not fun at all times, but we can make some money. All right, so that is Qualcomm. All right, I am way behind on comments. Thanks everybody for joining. We're 20 strong on the live stream. We've got members on the stream all over the place. Anthony, Mike, Shadow Guy, and Kiter's joined the party. Good to see you, and Kiter. Okay, so you're adding Qualcomm, man. I understand that. I'm gonna add some Qualcomm. So looks good to me. And then healthcare is in the red. Yep. OGN is overblown, in my opinion. Yeah, I agree. And then Anthony, are there merchant marine fleet gross tonnage trackers? Sorry. I think there is. There's some website out there. I was getting to it because when I was invested in Zim. If you do a Google search, you'll get to it. They'll tell you how much volumes are being, requested. It also tell you the rates, which I imagine right now rates are collapsing, which I'm curious to see where Zim's at. Because I've heard news that in Los Angeles, we have these two major ports, San Pedro and Long Beach, and it's a big port infrastructure for the country, because right there are a bunch of rail lines. It's on the I-10, which goes across the country. And I'm surprised that Zim is not collapsing further, because I've heard that in Los Angeles, beginning of this month, they're going to see a drop of volume by like 35%. That's huge. Well, what's Zim going to do with their ships? What are they going to be shipping? Less shipments. I would think that the shipping rates are going to drop because there's less demand. I'm surprised these guys aren't any lower. But there we are. All right. Yeah, I'll take a look at OGN on my own, Mike, because there's so many things that I have to like. It's probably going to take me an hour just to look at OGN because the the numbers are so unusual that I have to like think it through, and it's hard to do that on a live stream. But once I get there, I'll be sure to share it with everybody. All right, so we looked at MicroStrategy, OGN. Let's take a peek at CBS. Now, healthcare is having a bad day. Whoa! Not everybody in healthcare is having a bad day. That's good. All right. Well, I'll drink to that. CVS. Oh, man. CVS to the rescue. So they're surging 1 year high after earnings triple play. Wow, a triple play. That's very rare in baseball. So let's take a look at what is going on with CVS. And I am a CVS stockholder. I thought that they were going to make a comeback. And it looks like this is a stock similar to what we're seeing in OGN or Qualcomm. The market just sold it off like, oh my God, CVS is terrible. And I was like, yeah, they're not perfect. They got their set of problems, but boy, there's a lot of value there. And I started buying into them. So I wish these companies would make it easy on finding their. I mean, we are all going to their websites to see the earnings. Just make it like the first button. Anyway, enough complaining out of me. So this is announced today. Total revenues increased 7%. That's good. And earnings per share is there. Generated free cash flow from operations of $4.6 billion in the quarter. Very good. We'll see if that is lining up with what I expected in my valuation. GLP-1 drugs. Everybody wants to lose weight. So and they own Aetna. This is a company they acquired a number of years ago. This is a healthcare insurance payer. Okay. And then full year guidance revised. I believe they increased their guidance. So that's good. All right. So revenues expanded. Nicely done. Let's take a look at some other important information. And what dividend are these guys paying? Not a bad dividend, 3.73. All right. Looks good. So that looks good. The income statement looks good. We'll take the cash balances and stuff and put them into my valuation cash flow. Okay. So the first 3 months of 25 compared to 24, cash flow from operations went down 347 million dollars. And what kind of capex they put in the business? 743. So their free cash flow actually contracted a bit in 2025. It probably contracted by $400 million. Not a big giant problem. Cash flow tends to have not a total smooth path. I'm glad it's positive. And I think I'm using a very conservative rate of cash flow. Let's take a look at the valuation I have on CVS. I moved CVS, the earnings report, into a different screen. And now let's take a peek at the valuation I have on them, which needs to be updated. See, look at my free cash flow. Just in the first quarter, they were at 3.8 billion. So this is super conservative. I'm probably gonna have to move this up a bit. All right, so let's start with cash flow. Cash flow, they were guiding 6.5 billion. First quarter out of the gate, they're at 3.8 billion. So I think they guided low. So I'm going to change that. I'm going to change it to my estimate. So they guided at 6.5 billion before the year started. They're doing better. They're growing better. They're raising their guidance. So I'm going to go to 7 billion. They are going to grow by 15% because this business, when you look at CVS, I mean, this stock was much higher. And this is an industry that is a necessity, right? It's not like, hey, we're not going to need pharmaceuticals. No, we're going to need them. And they were $100 stock. Now they're a $72 stock. They really came down from their peak to the trough, 59%. So they're really oversold. And, my point being is when you look at this stock and then you see a company that's much larger from a revenue perspective, like compared to this point in 2022 to now, they're a bigger company making more money, having a bigger, I would say a bigger strategic or a competitive advantage against the competitors because their competitors are failing. Walgreens is failing. Rite Aid is bankrupt. So as those competitors fail, it gives CVS larger portions of the market. So that's a theory, and it needs to be substantiated by numbers. Okay, so I'm cool with that. We're going to grow by 4%, which is slightly above inflation. Okay, I'm going to keep the 8.5 because they're a comeback story. Now let's go take a look at cash. How much cash do we have in 2025? We've got two numbers. We've got 10 billion. And then we've got investments. And then we've got some debt. So long-term debt, 59. Yep, got two numbers there. So we got current portion of debt and then long-term debt. All right. So the stock is flourishing today a little bit, and we're still discounted by 37%. Now they're raising their guidance. Let me update earnings per share numbers. So 596 is the number. Growth rate. I'm going to change that to 12. So still being conservative, the stock's discounted. And CVS is a buy for me. I think the market has woken up to, okay, we oversold this stock a couple of years ago. They're growing, they're profitable, they're generating far more cash than first thought. I'm still super conservative on this number. I think after the next quarter, I'm probably going to move that up to 9 billion or so. But for now, it's a buy. It's discounted well. And that is CVS. Go CVS. Nice. Very good. So that's doing well today. That's good to see. All right. So it covered CVS. Let's see if I've got any other requests from members. Okay, 2 questions on UBS. So I didn't use Q1 because that wasn't available. but let's revisit that. And then, and the book value, correct. Okay, so let's take a look. So just to give everybody else context, so Shadow Guy wanted to look at UBS, and I had put that together and just sent it to him, and I updated the sheet that has all my valuations. I updated it yesterday, and UBS is in there. So UBS, when we look at, and it may have updated, by the way, since last night, but we'll take a look. So book value is going to be on the balance sheet, and so here's the book value. Oh, I did update. So now I've got a new number to use. This wasn't here last night. So that got even better. So we can update that number and let's revisit it. So I'll open up UBS on this screen. Okay. All right. So here's UBS. And bear with me. I'm just trying to get my information in order. Yeah, let me work on this Shadow Guy because I've got new data and I want to make sure I got everything right there, and then I'll send it to you on Discord because some things are not making sense, and I want to kind of take my time at it. All right, so I will handle that one-on-one. Let's take a look at the market real quick, see what's going on. So we got Meta down. Oh, down from its 5.5. Microsoft's kind of giving up a little bit. So market fading. So we've got, yeah, it's fading a little bit. Hopefully it doesn't it doesn't go down too far. We'll see. All right. That looks good. So on the earnings, we had so we went over Eli Lilly, MasterCard. I wonder what MasterCard's doing. So it's down a little bit. Interesting. Okay. Year to date, it's doing okay. Over the 1 year, it's doing well. Okay. Yeah. MasterCard's been pretty reliable, but the PE is expensive. This is an expensive stock along with Visa. I just have never warmed up to them because I just never feel like I'm getting a really good deal on them. They do have a competitive advantage, which is they have their network. So we'll I would say that I've never invested in MasterCard for that reason. I'd rather go after, like, I invested in PayPal and Robinhood. I think PayPal offers a really nice discount, but the market hasn't agreed with me. But hopefully they do. Let's see what PayPal is doing today. It's down a little bit. Okay. So that was MasterCard. What does Lind do? So Lind operates an industrial gas company in the US, China, Germany, and industrial gas company. So specialty gases. Okay. So you need these for manufacturing. Okay, materials. It's up a little bit. It's flat for the year. It's up nicely for the 5-year. PE is a little expensive. Forward PE, a little better, but PE ratio is expensive. This is not a growing company. So what's it doing with a PE of 32? That seems a little expensive. All right, so now I know what Lynn does. Cool. Roblox, excuse me. Up 4%. This one's a tricky one for me. It's look at this chart, but over the 1 year, it's just flourished. It has a market cap of 45 billion. Let's see if they have the earnings are in there. Good growth, 29%. They're not profitable yet. They have good free cash flow. Okay. Yeah, I'd probably take this valuation up to like 27 billion plus or minus plus cash or minus debt. And they have more cash than debt, 1 billion, so 28 billion. And they're at 47 billion. This one's been hard to figure out. I kind of missed it. I have looked at Roblox because I've got a lot of young men in my family, like 20 to 22-year-olds that love gaming. And then I have some like the next generation after that. They're like my nephew's son. He's 11 years old. He's huge Roblox guy. He's got his Nintendo Switch. Like that generation of kids, they all have a Nintendo Switch and they're big gamers. So they tell me about Roblox and they're big fans. And I'm like, huh, okay, kids like it. Let me look at their numbers, but their numbers just don't always line up to me. And I'm like, okay, cool company, but gaming companies, I was an Activision shareholder and Microsoft acquired them. I made a good gain there, but that's the only win I have in gaming. The other gaming companies, they're for the most part software companies, but I see better value in commercial, like software companies for business or for consumer use, like Zoom or DocuSign. I see better discounts there. Roblox is not discounted, in my opinion. So interesting that they're doing well today. They probably grew subscribers and so forth. All right, so that's Roblox and Kiter. Crude is back to the green. Oh, really? Whoa, okay. That's why energy was going up. Yeah. Okay. So that's why when I looked at energy, it was up. All right. So it looks like Meta's at 5%, Microsoft's at 9.2. Nice. Microsoft shareholders are happy today. All right. Okay, so let's see if there's any other interesting earnings that are out there. So we had Lind, Southern. I know we've looked at this one in the past. ICE, Intercontinental Exchange. And these guys are like CMI Group and so forth. They're up 2%. Good stock for the year, great stock for the 1 year. And just a winner. Look at that, consistent, beautiful. P is a little high, 35. They're a good growing company, 12.88. The most recent quarter, 8%. So the growth has slowed down a bit, but this has been a winner. Doing well today, up 2.2. Yeah, I think RBLX, it's an interesting company. Yeah, it really is. It's cool that they're kind of the RBX Roblox network. They don't design games; they just have a platform. So individuals or companies that want to design games can design them and then put them on their platform. That totally makes sense to me. But just the fundamentals aren't there yet. So we'll see if they ever get there. What's going on with Airbnb? They're catching a little rally before their earnings later today. I do agree with that. Airbnb can withstand economic downturns better than hotels because Airbnb has a strong value proposition, especially to families or anybody that when you go direct, it tends to um, be less expensive per person and you get more square footage. So let's say a large family or a large group of friends were going to travel somewhere and they were going to have to get 3 hotel rooms. Well, you can get one Airbnb and split the cost and probably be more comfortable. Probably have a funner time because you're going as a group. And that's why Airbnb is, I think, more resilient during recessions. And also, people that own a home and maybe they lost their job, they can Airbnb a room or two, or maybe their whole house, um, and get through that tough period by creating some cash flow out of a property that they have. So that's all that all happens during a recession. Motivated people adapt. They adapt to the conditions they find themselves in. So we'll see how Airbnb reports tonight. Looks like Ryan, when you add money to your portfolio, do you only add to positions you feel are cheap, or do you allocate a portion to split evenly among your stocks in case your valuation is wrong? That's a very good question. Thanks for the question. So I buy into stocks that I feel a couple of things going on. First, discounted. Unless it's a really, those companies in the green, right, that I was talking about earlier that are in this green quadrant, right? That maybe, hey, I just want to be an Amazon stockholder and I'm waiting for the right periods of time. I may buy near its fair value, near its intrinsic value. But moving away from that, I'm trying to buy stocks that are discounted that fit a sector that I want to own more of, like materials has been one of the sectors that I've been wanting to buy into. So I'm buying into one stock that I think gives me the best discount, buying into that one stock, or a couple of other stocks that are, I think, really exciting. And I share that information with members and I share it twice a week on what I'm buying. But that's how I approach it. I don't allocate across the board. I think I'm not going to argue against that. If that works for somebody else, that's great. But that's not what I want to do. I want to actively manage my portfolio and, buy into the stocks that I think are the best ones to buy in the month of May. And right now I'm buying into like maybe 5 stocks and I own like 38 stocks. Some stocks are, good to hold. And that's how I go about it. Good question. Thank you. Rotel and cheese. Airbnb is increasingly facing regulatory headwinds in Europe. The tax man is clamping down on such rentals. I agree with you, but I'm going to turn that around a little bit on you. Not on you. I should just say I'm going to view it from a different perspective. When Europe or anybody else, like New York City, I'll give you an example. In the island of Manhattan, you cannot rent an Airbnb. So when I travel to New York City with my family, we stay in Airbnbs in Brooklyn. Okay. And I get that the city of New York can, their PR department can say, oh, we're going after Airbnb. Okay. Got it. But you're also going after individual or a husband and wife that own a property in Manhattan that would like to rent to travelers because maybe they don't use their apartment every week, or maybe they're struggling economically and they're like, man, I'm either going to have to sell my apartment, or if I could rent it on weekends and then we can go stay with my in-laws or something. You're taking that away from an individual that owns a property in Manhattan. So that's one point. Second point, people that want to stay in Airbnbs will go to the next best location. In our case, we rented in Brooklyn and we crossed the bridge, took the subway. So now dollars that would have been spent in one area are now being spent in another. And you see that like here in Anaheim, we have Disneyland, and Disneyland banned Airbnbs in the city of Anaheim because the big resorts and Disney didn't want the competition. Okay. Put a period on that. So the surrounding cities now have the Airbnbs. So the property owners around the city of Anaheim are seeing their property values go up. They're making the money. So I think as these governments try to appease, I guess, the powers that got them into office, the people that paid, political contributions, they're doing it and spinning it with a particular story. But being a real estate investor, I'm a real estate investor. I've owned 2 Airbnbs and I did really well with them. Sold both of them at a nice profit, made a lot of money on those Airbnbs actively, provided good experiences to the people that rented our Airbnbs. Whenever we have situations where individual entrepreneurs are able to provide something that the market wants, being able to provide a product or service that people appreciate, that's ideally what I would want to happen. Whether it's that individual is providing a service for healthcare or for whatever, that's what we should be doing. When governments come in and clamp down and say, "Oh no, I don't want Airbnbs to exist in this region." Well, why is it? Well, because certain, you know, um, certain parties don't like it, especially the ones that have a lot of money and have been politically active. Well, that's not business. That's kind of, creating policies that maybe impact free trade or impact free commerce. Just let entrepreneurs create good value. If they're damaging, things, or maybe creating, dangerous properties that people get hurt in, okay, you got to stop that. Got to have regulation. But I think it's nuts. I've traveled in Europe. I stayed in Airbnbs in Germany, the Netherlands, Belgium. Actually, in Belgium, I stayed in a hotel. Paris, Italy, multiple cities in Italy. Great experience. Just awesome experience. And I think it really changes the game when you can stay. Like I stayed in Florence, in this really cool area, really comfortable, newer apartment. It was really comfortable. Loved it. If I had to stay in a hotel, I'd be like, okay, my experience just got downgraded. So I'm a fan of Airbnb. I like Airbnb. Cool. Yeah. I think if you put, you know, entrepreneurs and let them exercise ideas and create value, I think that's always going to be the best thing. We have over regulation and the government thinking they know best, then we're in trouble. I've yet to see a government, compete. It's not like the government's like, hey, Google doesn't do search well enough. We're going to create a search engine that's going to be better than Google. Go for it. I think you're going to fail miserably. And they probably would. And pick the product or service. Now that the defense is a different matter, right? They do, defense really well. The armed forces and stuff, they do that really well. So they can stay in their lane. stay out of the way of entrepreneurs that are trying to, give people good hospitality. All right, so let's take a peek at the markets, and then we'll conclude the live stream. So we've got NASDAQ is up 1.8%. Looks good. Looks good. This rally is looking like it wants to stick. I'm okay with that. Looks like Microsoft is having a stupendous day. Meta's having a good day. Amazon's catching that rally. I would have thought that Google would have gone up higher. It seems like Google and Meta kind of are little buddies, and they kind of go up or down together. But Google doesn't get a lot of love. What happened? Maybe Google's got to get a more likable mascot. NVIDIA's up. CRM is up. ServiceNow is up. Eli Lilly's down, man, taking the whole space down. And energy's up. Industrials are doing okay. Caterpillar's up. Deere's up. Very cool. Airbnb is up. All right. And CVS, a couple of the bright spots in healthcare. CVS is up. And I don't know what this one is. And then this is Intuitive Surgical. All right. So guys, really interesting time, man. It's really interesting to watch these companies, kind of move this year. Microsoft has kind of had a flat period, for its stock, but now it's really flourishing on today's news. And I think that I would have expected that that Google would have done better. Microsoft for the 1 year, you see how it's kind of gone sideways, and actually more recently, along with everybody else, sold off. Now, they're not the only one. Just look at everybody else's stock. They all sold off. But now we're kind of back to even for the year. It's up 9% year to date. It's up 2%. It's really working now. And I think it caught everybody's attention. Everybody's loading up on Microsoft. Very good. $3.2 trillion. So this thing added more than $200 billion of inflows today. Woohoo. That's a lot of capital flowing into one stock. Nice. Very nice. All right. On that note, I will conclude the live stream. Thanks so much for joining, everybody. And thanks for all those that joined the watch party for Microsoft and for Meta. I'll schedule one for today to watch Apple and Amazon. Those are going to be really interesting, and anything else that comes up. If you're a member, look for an email to come out with the details on how to join. If you're a Discord member, look on Discord, and that's where you can get the login. Everybody, have a good day. Good luck with your investments, and let's watch this really interesting market rotate, flow, change. Some stocks are up, some stocks are down. Boy, it makes this really, really interesting. And let's figure out how we can make money, how we can find the best stocks to own, and see how we can increase our net worth through stock investing. All right, everyone. Have a good day. Take care.